Welcome to the Deep Dive. We've got a really interesting source today, a news piece that's stirring things up around, well, potentially new crypto ETFs hitting the U.S. market pretty soon.
That's right. This article really focuses on some recent filings by REX shares. They're looking at new staking ETFs for Ethereum and Solana.
Okay, so our mission here is to, unpack this. What makes these ETFs different? Why do some analysts think they could launch, like, any minute now?
And what does it actually mean for you if you're interested in getting exposure to crypto and maybe earning those staking rewards too?
Yeah, and the thing that really jumps out right from the start is how analysts are describing these funds. They're calling the structure very rare.
Mm-hmm. And even saying it looks like a regulatory end around, which, definitely catches your ear.
Regulatory end around. Okay, yeah, that makes you sit up.
Yeah.
So what is this structure? Why do they apparently need it? And, well, why has adding staking been such a big deal? Something everyone's been waiting for. Let's get into it.
Okay, so the core news, pulled straight from the source. REX Shares has filed the paperwork for these ETH and SOL staking ETFs.
Right, but it's the timing prediction that's really striking.
Yeah.
Analysts, James Seyffart and H. Russi, they're quoted saying the launch seems imminent.
Yeah, maybe even within the next few weeks, which is, well, faster than you usually see for this kind of thing.
Definitely. So why so fast? Does the article get into that?
It does, and it seems to come down to how these funds are built. Seyffart points out they're not your, standard ETF setup.
Oh, how so?
They're structured as C corporations, which he says is very rare in the ETF world.
A C-corp. Huh. That sounds more like, well, a regular company, not an investment fund. How does the filing explain what that means for the fund?
Well, the filing's quite specific. It says the fund is classified as a C corporation for tax purposes.
Okay. Tax purposes. What's the impact of that?
It means the fund itself will incur current and deferred tax expenses, unlike a lot of ETFs where taxes sort of pass through to you, the shareholder.
So the fund pays its own taxes internally.
Yeah.
How does that affect, the investor holding it?
The filing clarifies that. It says such current or deferred tax liabilities will be reflected in the fund's net asset value.
Oh, okay. So the NAV, the price per share you actually see, already has those potential tax costs baked in.
Exactly. It directly impacts the performance figures. It's something you definitely need to be aware of.
That's a key detail.
Okay.
Now let's loop back to those strong terms the analysts used. Regulatory end around, clever workarounds. How does being a C-corp connect to that?
Right. So Seyffart explains these are 40 Act funds. That's a type of investment company structure, but, and this seems key, they do not go through the 19B4 process.
Okay, wait. The 19B4 process, that's the usual path, right? The one that often seems to take ages for crypto ETFs trying to get listed on exchanges.
That's the one. The article even mentions the SEC uses that route normally, and they just delayed a decision on Bitwise wanting to add staking to their Ether ETF using that same 19B4 path.
So REX shares, by using this C-corp 40 Act structure, they essentially sidestep that specific 19B4 review.
It looks that way based on the analysis in the article. It seems like a way to potentially get around that particular regulatory step, which has been tricky for others, especially when staking is involved.
Right. Avoiding a known delay makes sense if you want to launch quickly. Does the source give any hint from the analysts about why this might be an acceptable path to regulators?
Well, Seyffart offers a thought. He suggests a pro of this setup might be that this was one way to get some level of sign-off from the SEC.
Ah, interesting. And implying maybe the structure was easier for the SEC to say okay to, especially with staking included right away.
Possibly. It suggests maybe this framework felt, more manageable or acceptable to regulators than trying to fit staking into the existing ETF approval processes.
Getting any kind of green light for staking in an ETF is, well, it's been the goal for a while. And that's the main feature here, right? Staking.
Absolutely.
How much are they planning to stake? Did the filings say?
Yep. The article mentions both funds are aiming to stake at least 50% of the Ether and Solana they hold.
At least 50%. Okay, that's a decent amount. Why is staking such a big deal? Why has everyone been anticipating it so much, particularly for Ether ETFs?
The source really hammers this home. It's been highly anticipated because, well, staking lets you earn a yield, a return on the crypto itself. It's not just about price going up.
Right. You get income.
Exactly. And they quote Robbie Mitchnick from BlackRock. He's their head of digital assets. Talking about their own Ether ETF, he apparently called it a tremendous success, but also less perfect because it didn't have staking. When a huge player like BlackRock says that, it really shows you how much the market, or at least parts of it, wants this feature.
Yeah, that's a pretty strong signal. So there's clear demand for getting that yield inside an ETF. Makes sense. Now, how do these funds, these C-corp, actually get hold of the Ether and Solana in the first place?
Another interesting detail from the article. They plan to get that spot exposure via Cayman subsidiaries.
Cayman subsidiaries. Okay, so another layer to this quite unique structure they've put together.
Seems like it.
All right, so let's try and pull these threads together. We've got the C-corp structure, avoiding the 19b4 process, aiming for 50% plus staking using Cayman subsidiaries. What's the final take from the analysts quoted in the source?
Well, summing it up, both Seyffart and Gerasi seem to see this whole package, the C-corp, the 40 Act, skipping the 19b4 as pointing towards an imminent launch.
And they view it as a deliberate strategy, right?
Yeah.
Using these regulatory workarounds.
Yes, exactly. A way to get staking for ETH and SOL into the market quickly, because that's what investors have been asking for.
And Seyffart did flag that it's not all upside, right? He mentioned pros and cons.
Right. He specifically pointed to those tax implications we talked about, the ones hitting the NAV, as a definite con, or at least something potential investors really need to factor in.
While Gerasi seemed to emphasize the staking target, that at least 50% as a key feature.
Yeah, it's definitely a novel approach, trying to thread the needle between market demand and the current regulatory situation.
Okay, so let's just quickly recap the main points from this deep dive then.
Sure. The big picture is REX shares looks like they might have found a clever, maybe unusual way using a C-corp structure under the 40 Act, and crucially, avoiding the typical 19b4 process to potentially launch Ethereum and Solana staking ETFs in the U.S. really soon.
And analysts are calling this a kind of regulatory workaround to deliver that highly sought-after staking feature.
Exactly. And the key details for you to remember are that C-corp structure means taxes are handled internally, which affects the NAV.
They'll use Cayman subsidiaries to hold the actual crypto.
And they're aiming to stake a pretty significant chunk, at least half of their holdings.
It's definitely a fascinating mix of like financial engineering and navigating regulations.
It really is.
And it kind of leaves you with a final thought, doesn't it? If this specific structure, the C-corp, the tax setup, the regulatory path they took, if it works, if these staking ETFs launch quickly and successfully.
Does it create a new template?
Yeah, exactly.
Yeah.
Could this become the go-to method for bringing out other financial products with new or, complex features, especially in the crypto space or beyond?
What does it tell us about how innovation keeps kind of pushing against regulatory boundaries?
Definitely something to keep an eye on as you watch how these potential REX shares funds actually play out in the market.